Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing certain details about a complex problem on retirement of partner with an illustration that will be mentioned on the sheet. So as you know, retirement and death, we have learned about death, we have learned about admission. Now in terms of retirement, there is a sacrificing ratio, there is a gain ratio that we have to understand. However, when it comes to retirement, there is gain that happens. When it comes to admission, there is sacrifice that happens. So right now we'll be understanding about a complex problem which is related to the sacrificing, or rather we can talk about the gain ratio by the other partners due to the sacrificing part of the retiring partner with a complex problem and the illustration mentioned here with. So what we'll be doing is that we'll be mentioning an illustration down here. Make sure you note down this illustration for your reference so that you can understand how this problem has been solved and what else has to be done whenever similar problems occur into your exams then. So it will be a very easy sum to resolve, and hence we'll be understanding the complexity of all different items being a part of this illustration. So let's go down with the illustration first. So we have derived the balance sheet of this specific question. There is a company where Mr. A, B and C are partners. Now the profit and loss ratio is 3:2:5 for A, B and C respectively. We have been given a balance sheet here. Let's check the balance sheet first. The capital account shows Mr. A had 1,04,000, Mr. B had 76,000 and Mr. C had 1,40,000 in total, which gives you a total of 3,20,000 for the balance sheet. Long-term loan for was rupees 4 lakhs. Bank overdraft was for rupees 44,000. And trade payables were 1,93,000. Similarly, on the asset side, we have land, which is 1 lakh. The next item is building, which is worth rupees 2 lakhs. Plant and machinery worth rupees 3,80,000. Investment is worth rupees 22,000 here. Inventories are worth rupees 1,60,000. That is 1,16,000 technically. Trade receivables is 1,39,000 here. So the total of asset and liability is 9,57,000. That means balance sheet tallied at 9,57,000. There are certain adjustments that we'll be doing further. So let's note down the adjustments first. Now the adjustments have been mentioned here and we'll further go ahead with jotting down these problems. So let's go with the adjustment first and understand, post which we'll be preparing the main content of this illustration. So it was mutually agreed that B will retire and D will be admitted as a partner. Yes, correct. This is a different sum. Here retirement doesn't just include retirement of the partner, but it also includes that a new partner will be admitted. Now what is the effect of this? We'll understand when we start solving the problem. And this was effective from 1st of July 2011, where B will be retiring and D will be admitted as a partner on the same day. Goodwill was valued at 2 lakh rupees, which won't be appearing in the books of account as mentioned in the adjustments. Building, plant and machinery were to be revalued at 90% and 85% respectively. That means building at 90% and plant and machinery at 85%. Investments were to be taken over by the retiring partner at 25,000. Now, in this adjustments, they've also mentioned that trade receivables are considered to be good only up till 90%. The rest 10% can be considered as bad debts. Now, in this reconstituted firm, the capital of the firm was supposed to be 3 lakh rupees, which is to be contributed by A, C and D in the ratio of 3:4:3. The last adjustment states that amount due to the retiring partner will be transferred to his loan account, and we have to prepare the revaluation account and partner's capital account here. So let's start with the calculation first. Now goodwill was valued at 2 lakh rupees. So first we need to find out what is the sacrificing and gain ratio here. So let's figure that out. So now that we have calculated the sacrificing ratio, we can see that only B and C have sacrificed. A has not sacrificed here. The ratio is 2:1 for B and C. Accordingly, we have to go ahead and calculate the value of goodwill. That means D's share of goodwill will be taken over by the existing partners in this sacrificing ratio, that is B and C only. So D's share of goodwill is 2 lakh multiplied by 3 upon 10, that is his share, which gives you 60,000. Now this 60,000 will be divided in the ratio of sacrificing between B and C, that is 2 upon 3 and 1 upon 3. This is the first adjustment calculation that we have done. The next one is the capital. So what is the capital that has to be shared between A, C and D is supposed to be considered. So let's go ahead and figure that out. Now this is how the capital adjustment is supposed to be done. If we can see, 3 lakh is the total capital which was supposed to be divided between A, C and D in the ratio of 3:4:3, which has been done. So for A and D respectively it is 90,000 each, and for C it is 1,20,000 as the part of the capital. Here we have done with the calculations. Now let's go ahead and figure out the revaluation account first. Now we'll have the debit side and the credit side of revaluation account. So let's take care of the debit side first. So if you remember, the adjustment said that there will be a revaluation. So building will be depreciated, or rather will be valued at 90% and plant and machinery at 85%. So that difference has been mentioned here on the value of the building and plant and machinery that has been mentioned in the balance sheet. The value of the investment was 22,000 as mentioned in the balance sheet. However, in the adjustment it has been mentioned that it will be taken over by the partner at 25,000. So 3,000 increase, hence as it being increased, it has been credited on the revaluation account. Now trade receivables was something that was mentioned which will be good until 90%. Rest 10% will be a bad debt. So that thing has been mentioned here as a revaluation loss. Hence it has been mentioned on the revaluation debit side. So this is how we have prepared the revaluation account. The next thing that we'll be doing further is that we'll be taking the total of debit side and credit side, because there is nothing else to mention in this revaluation account, and we'll be figuring out whether we have a loss or whether we have a profit in this situation. Ideally we can see there is a loss here because the debit side is higher as compared to the credit side. Now this loss on revaluation will be shared by A, B and C in their old profit sharing ratio. Now we'll go ahead and mention the amount against every partner here. So this is how you have to prepare the revaluation account for this illustration. Now let's go ahead and prepare the partner's capital account, post which will mark the closure of the sum. Let's prepare the partner's capital account. So the first thing that we have transferred to the partner's capital account is the revaluation loss which you have done in the previous slide or in the previous window. So the loss on revaluation has been moved here. Hence that is the first item that we have posted. The next item that we'll be doing is transferring the partner's capital account. We have carried down the initial partner's capital that has been mentioned for A, B and C. D we haven't mentioned anything because we'll be mentioning it in the end. This transaction that we have mentioned here in terms of B's and C's capital for 60,000 is the share of the goodwill of 60,000 which will be contributed by B and C here. So that has been mentioned out with. The next transaction that we have mentioned is the investment that was taken over by B, which was for 25,000. Now the next thing that we have mentioned here is the new capital requirement that is supposed to be contributed by B, or rather by the new partners, that is A, C and D. That has been mentioned here. This marks the closure of the partner's capital entries. However, we have to finalize the total here. So let's go ahead with the total of B first and then A, C and D. So the total for B has been done, that is 73,420, which will be transferred to his loan account. This has been done. Now the next part is totaling the requirement that is supposed to be credited as a partner's capital. So if you remember, this is the new capital that A, C and D has to contribute. So partner's capital credit side will be the balancing side here. So let's do that thing. So for partner A, debit side is 116,370. Similarly, the credit side will be the same amount, and the balance will be the amount that he has to bring in terms of capital addition. The same thing will be doing it for C and D respectively. So this is what these partners, the new partners, will be getting into the form of capital to increase the capital up till 3 lakh. So A, C and D will be taking in this much of amount. So the entry that will be passed here is bank account debit to partner's capital. Hence partner's capital credit side has been mentioned as bank account credit. So this marks the closure of this specific sum. I hope you have details or you have been very clear about how to solve the retirement problem which is related to such kind of theory where during the day of retirement a new partner is also admitted. So if in question or if in exam, if you have such kind of questions, it should be easy for you to go through and figure out how to solve these problems. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.